Sometimes the best place to hide is right out in the open, as we're about to see in this example. For those of you that have watched many of the past ClayTrader Mail videos, I'm sure you've noticed that there's a big theme about kind of bad habits, making sure that you're not letting things that you don't want to creep into your strategy, come in through different angles and such. And today we have another example of that, except it's a little different in the sense of it's just this person fully admits to it, but they don't realize they admit to it. And it is surrounded by a bunch of good things that make sense. So I'm by no means bashing this person. Like I said, they have, and they're saying a lot of things, a part of their strategy that, hey, I'm not, no arguments on my part. It makes sense, and they got a lot of good things going. But you can have a lot of good things going, but all it takes is one or two of these little things, and everything else can be ruined. And the crazy part about this is they even admit that one of those little things can just destroy everything else, yet they're still doing it. So let's just kind of hop right in, and I want to just take a little sentence. I mean, I'll read a paragraph, but really there's just one sentence that I want to kind of deconstruct and look at just how this little bad habit, how this kind of mind trick is working within this person's strategy. So Sean says, trading is all about risk management. Yeah, there's potential unlimited risk in theory if you don't cut your losses fast. You don't just blindly short some low flow parabolic and walk away. Like I said, I won't even hold a short overnight most of the time. That's how you blow up. But if you short into resistance levels with minimal risk and cut losses quickly and intelligently when a trade isn't going your way, it's just as risky as going long. Did you catch it? Maybe rewind back before I go on to this next slide. And there's some very, wait, what? You kind of read it and maybe we'll do, wait, and you kind of got to read it again saying, wait a second. But let's go and deconstruct it. But let's just kind of, and I'm not trying to insult anybody's in your intelligence, but let's just look at it case by case and make sure that we're all on the same page. That's how you blow up. Now we're working a little bit backwards, but that's how you blow up. So what is how you blow up? Like I said, I won't even hold a short overnight. So again, they admit that that is how you blow up. How do you blow up your account? As we just discovered here, you can do that by holding a short overnight. Because if things go drastically against you, as this person that has admitted, you can blow up your account. But then there's one more part. Most of the time. Most of the time what? Well, most of the time they won't hold a short overnight because that blows up your account. But most of the time is not all of the time. So going back to their first part, it's all about risk management. Good on you for identifying a major pitfall in shorting, especially penny stocks with this whole kind of conversation is taking place in. Yeah, you can blow up your account by holding overnight. So they don't do that most of the time. Or in other words, I do it sometimes. So why are you doing something that can potentially blow up your account, which you've just admitted in the same sentence, or I guess the next sentence? So to sit there and say that I will not even hold shorts overnight most of the time because they blow up your account. Wait, what? Hopefully you see that. And it's tricky, it's slight, but that makes no sense. From a risk management perspective, if you've identified something that can literally blow up your account and yet you're still doing it, even if it's just once in a while, that doesn't mean it's okay. You shouldn't be doing it at all. Something that can, let's look at it like this. I will never blindfold myself before I cross a busy street most of the time. I mean, that's how you get killed. You've been thinking, wait, say that again? I will never blindfold myself before I cross the street most of the time. I mean, that's how you get killed. You would be thinking, wait, why would you ever blindfold yourself? I mean, don't get me wrong, that's great that most of the time you don't blindfold yourself before you cross, but why would you do it ever at all if you know that that's a great way to die? Same concept here. Something they've identified, blowing up your account. They don't do it most of the time, which is good, but that doesn't mean that they're not doing it all the time. Now, do you have this exact problem in your trading strategy? I don't know. Maybe you do. But be honest with yourself and kind of when you're putting together trade plans, make sure you're not contradicting yourself. If you've identified something that's really stupid, that can be really detrimental for your account, that can, in this person's terms, blow it up, which is, as drastic as it gets, you should never be doing that. Don't let the voices creep in and say, yeah, this is super, super, super risky because it could blow up your account. But I mean, you only do it like once or twice a month or once or twice a year. I mean, so you'll be fine. Don't listen to those voices, because all it takes is one time and your account's blown up because you're doing something that you shouldn't be doing. And the crazy part is you've already identified that you shouldn't be doing it, yet you're still doing it. So it really just goes to show how tricky those voices in our minds can be and why trading is such a psychological game. Because if you're not aware of it, I mean, you can just be flat out contradicting yourself out in the open there. So, no, I have no idea if Sean will watch this, but if he does, hopefully that can help out. And for you watching, hopefully it kind of help you out. But I mean, I've been there before, and that's why as soon as I read it, I'm like, oh yeah, it's tricky. The mind is a tricky place, and greed is a tricky place, and that's where that comes from. People just get greedy because, oh, if I hold overnight, I bet I can get a little bit more. And I know it's stupid because it's super risky, but I barely ever do it, so I'm just going to listen to my greed because I think I can make more money and they do it. And could you be okay? Yeah, absolutely, you could be okay. But it just takes once, and blowing up your account is not what you want. So be aware of that. Make sure you're not contradicting yourself out there in your strategies. And when you identify something that's super risky, don't ever, ever cross the street with a blindfold on. It just makes no sense.